Welcome to the Explainer. Look, we absolutely have to talk about AMC today. The stock is up 5%, and I know for a fact that's caught a lot of your attention. And frankly, it should. Seeing green on the screen is always exciting. But let's take a step back and get real for just a second. If you bought into any of the last three major spikes, your portfolio is probably still sitting in the red. So my goal for you today is a stark reality check. We're going to open the hood and break down exactly what is driving this recent price action.
Okay, let's dive into this. Is this the start of a legitimate fundamental recovery for AMC? Or are we just staring at another bull trap dressed up in flashy headlines? That's the question we're answering today. We're pivoting sharply away from all the social media hype and emotional trading, and we're going to look strictly at objective, fundamental analysis to figure out what's really going on here.
Here's our roadmap for this explainer. First, we'll look at the actual news behind today's pop. Second, three critical numbers that honestly matter way more than the current share price. Third, we'll contrast the trader playbook with the investor playbook. And finally, the governance vote wildcard. This is a structured investor-grade breakdown of capital allocation. No hype, no moon talk, just the facts.
All right, Section 1, the news behind the pop. We need to examine what specific catalysts are driving today's price action, and more importantly, whether they actually hold any weight. So, today's 5% pop really boils down to two main things. First, there's talk of a governance overhaul. AMC is proposing some changes to shareholder voting rights and how preferred shares are converted. The market is taking this, at least right now, as a sign of lower share dilution risk. Second, we've got box office sentiment. Projections for the summer 2026 box office are actually outperforming expectations. The logic is pretty straightforward. More people in seats means higher concession revenue, which equals better cash flow. But I want you to keep a healthy dose of skepticism here. Just 5 days ago, this stock was down on these exact same fundamental realities.
Because the fundamentals haven't actually changed in the last 5 days, that tells us something huge about this stock. The recent price movement is entirely sentiment-driven rather than value-driven. The news, that's just the spark. The real fuel pushing the stock upward right now is options flow and retail FOMO, the fear of missing out. The retail crowd rushes in on a headline, and it creates this massive momentum that just isn't anchored in the company's actual financial health.
Moving right along to Section 2, three numbers that matter. I promised you we'd strip away the online narratives and look at the hard data, and that's exactly what we're going to do right now. Our first crucial number is 18 to 22%. That is the current short interest on AMC. Now, is that elevated? Absolutely. But it's really important to understand that it falls way short of the 30% plus threshold you typically need to see to trigger a true explosive short squeeze. So yeah, it's a high number that traders are definitely watching, but it's not the ticking time bomb that some of those online forums might have you believe.
Now for the second number. And look, I need you to take this one very seriously. 100x. That is AMC's debt-to-equity ratio. And no, that is literally not a typo. A debt-to-equity ratio of over 100 times reveals deep, systemic flaws in the underlying fundamentals of this business. It means the debt burden is just absolutely massive compared to the actual equity held by shareholders. And this brilliantly illustrates our next point. Because of that extreme debt burden, on a book value basis, AMC is what we call technically insolvent. That's a financial state where a company's liabilities completely eclipse its assets. You really can't overstate the gravity of this. AMC is surviving right now primarily because the debt markets are feeling somewhat forgiving and because retail investors just keep buying shares, which keeps the liquidity flowing.
But hey, in the spirit of looking at all the data objectively, our third metric is actually a positive one. Literally, operating cash flow is positive for the first time in 2 quarters. This is a legitimate, tangible improvement. If management can actually sustain this positive cash flow through the third quarter, the company's immediate bankruptcy risk drops from high down to moderate.
However, let's keep that positive stat in its proper context. Even with positive cash flow, the company is still actively burning through capital just to service that giant mountain of debt we just talked about. Right now, practically every single dollar of profit goes straight to paying interest, not toward growing the business, innovating, or returning value to you, the shareholder. It's like a treadmill that just can't easily step off.
Which brings us to Section 3, the trader versus investor playbook.
This is where I'm urging you to be completely honest with yourself about why you are putting money into this stock. We're going to look at a highly practical framework depending on your actual goals. You've got to know your time frame. Are you a trader, holding a position for a few hours up to a few weeks? Or are you an investor, holding for months to years? The active, tactical mindset you need to trade AMC's volatility is wildly different from the cautious, fundamentally driven approach of a long-term investor. Let's break down the playbook for both.
If you're a trader, look, this is an active battlefield. Your playing field is that $4.50 to $6.50 range. The tactical strategy is to buy near that $4.50 support line and aggressively sell into strength as it approaches the $6 to $6.50 mark. Risk management is completely non-negotiable here. You absolutely must set a hard stop loss below $4.20 to protect your capital. Also, keep a close eye on options gamma. There's heavy open interest at the $5 and $6 calls, meaning market makers will likely try to pin the price right around those specific levels. You've got to stay nimble.
Now, what if you're an investor looking for a long-term hold? Honestly, the verdict is a hard pass. The structural headwinds are just way too severe. You've got a declining long-term chart trend, theatrical release windows that keep shrinking, and the undeniable dominance of streaming right in your living room. This is absolutely not a retirement holding. The only exception, if you feel you simply must have exposure to this stock, treat it purely as a speculative lottery ticket and allocate less than 2% of your total portfolio.
And finally, Section 4, the governance vote wildcard.
So that governance proposal we mentioned at the very start of the explainer, it isn't actually finalized yet. It's the ultimate forward-looking variable that could easily upend the stock's trajectory in either direction. Now, what's really interesting about this is the clear if-then scenarios tied to this upcoming vote. If the vote passes with strict caps on future dilution, the market is going to love it, and you could easily see a short-term push well above $6. But if the vote outcome expands management's ability to issue new shares, which means more dilution for current shareholders, the support at $4 likely breaks, and we could be testing the $3.50 range real quick.
Which brings us to an absolute golden rule of market participation. Never trade ahead of a vote you don't understand. It is always better to wait for the actual result and react to the facts rather than just gambling on a prediction. Trust me on this one. Missing out on the first 5% of an upward move is far better than getting caught in a sudden 20% drop just because a vote didn't go the way the internet predicted.
So, what should we actually take away from all this data? Let's quickly summarize our core realities. Number 1, AMC is a trade. It is not a long-term investment. Number 2, while today's news might be positive sentiment-wise, it doesn't magically fix a structurally broken balance sheet. And number 3, if you decide you are going to play this volatility, you've got to size your position so that a sudden 50% drop wouldn't keep you awake at night. You have to separate the emotional hype from the structural, financial reality.
And that brings us to the end of our analysis today. Now I want to turn it over to you. Based on the hard numbers and the technical realities we just walked through together, are you buying, are you selling, or are you just grabbing some popcorn and watching this one from the sidelines? Drop a comment below and let me know how you're playing it. Thanks so much for joining me for this explainer. Stay disciplined out there, and I will see you in the next one.